button. And we're live, guys. We're recording. This is going to be live on Saturday. And today with us, we have Amadeo. If you don't know Amadeo, you are missing out, guys, because this guy 2 years ago predicted the peak of the last cycle.
Let's
And
fucking
he's
go.
going to do the same today. He's going to predict the peak of this cycle today. But if you look at this video from 2 years ago, in February of 2021, Amadeo here was predicting that ETH is gonna top out at 5K, Bitcoin is gonna top out at 70K, and we topped out basically like 7 months after this at exactly those prices. It was insane, and of course, now is the time for a new cycle. We are basically where we are. We're now basically where we were in that like February 2021, maybe a bit earlier in terms of the cycle structure. But Amadeo, listen, great having you here. Very curious about how you're thinking about this cycle and how have you been this all these years.
Yeah, it's been amazing. Like the DeFi Capital Fund was a great segue for me after the DeFi 101 and DeFi 201 that we did together on the Ivan and Tech Academy. That was also
Oh yeah,
really
yeah,
cool.
guys, that's actually how we start to. Even before that video where Amadeo predicted the peak, we were working on the academy. So all of you guys who are in our academy and you were in the academy like 2019, 2020, you know Amadeo from the DeFi courses, because as soon as DeFi became a thing, we
Yeah.
published two great courses about DeFi that introduced thousands of people to DeFi for the first time. And this was, when people didn't even know what the hell Uniswap is, what is liquidity pool. This was crazy times.
Very crazy time, and I think there's a pattern, Ivan, in our live streams and things we do together, because we kind of if we're together as a team, we always hit the right narrative, right? Like we were spot on with DeFi. Then DeFi kind of was also that cycle in 2000, in 2019 when I also gave the price predictions. So we were spot on the DeFi summer and everything that happened there. And I do see that we're entering a new cycle right now as well, right? And there's a lot of things that happened in between. I run the fund DeFi Capital that was very successful because we had this target click strategy, which you can rewatch in the video, and we exited everything at the right time. And then we, as you can see right there. So that was a great video. I would recommend everybody just rewatch it, and I can also send the prospectus. And I think it also underlines like what is the best thing to do in crypto, right? Like we can run around, we can do like day trading and stuff, but most people that do these day trading things lose money. Like 80-90% of people that think they can beat the market will lose, right? It's just about trying to get this unfair knowledge advantage, how Ivan always calls it, and try to like front run the market by like looking ahead what's coming, right? We all know we're living in the last days of, hopefully not the last days, hopefully it's not going to be a big crash or anything, but there is a not a revolution, but an evolution to a new monetary system, right? That is for sure going to happen in our lifetimes. So the best that we can prepare for that, like think for yourself, how do you prepare for that? Well, buying hard assets. We need to have assets that cannot be printed. We need to have hard assets like real estate, gold, and of course crypto. Crypto emerged for an answer for people and everybody to get out of this broken fiat system, save their own assets, save their own economic power, and transform that into wealth for yourself and to preserve your own wealth and your own sovereignty. And that's why crypto is created. And we see a continuation of that technology just marching forward and putting us into a new cycle. And let me actually share my screen, or like I can show what.
Yeah, I mean, it's exactly like you said, but and most people they think that this time is different. That this time, something is gonna go wrong. Now we're dumping a bit. People are worried, but I love how you here have a long term view on things. So please tell us
Yes.
what do we see here.
Yeah, so when I got in crypto, and when me and Ivan, we met each other in 2016, I believe, even, right, Ivan, like when you started your videos. And I was back then already working for Cyber Capital, a fund in the Netherlands. And I got in crypto in around like 2012. So I got in crypto all the way here, bought my first like Bitcoin and stuff, didn't really understand it. Was like, oh my God, it's going from like, it went back then, it was like, I think these numbers are not fully correct here, but like it went from like $50 to $100 and back. I was, oh my God, what's going on here? It's too dangerous. Forgot about it. Then we had the first like 2013 halving, which I kind of didn't understand. That happened, and it took me many years to fully understand what's going on here. And it's quite straightforward. This is an asset that is non-printable. The government cannot control it. It's a sovereign layer of like gold, I would say, right? And we can park our assets there, and it's safe. And I think it's gonna repeat itself again. And it's just we look at history, we look at the data, we overlay the data with the data points from the past, and we can make predictions for the future. And yeah, that's what I basically did in 2019 together on the channel with DeFi Capital. And then I give courses about DeFi. And then we made a prediction here in 2019. We basically looked at the historical market performance. We looked at the internet bubble. We looked at the S&P 500. We overlaid these data points over each other, made a prediction of like a prediction for actually 10 years. Our prediction was in the coming 10 years, we're going to see at least another bull market. We predicted that, and exactly as predicted, it came out. We just didn't know what the time frame was. But interestingly enough, it was a very similar time frame as the halving cycle that we have seen before. And I think we're going to see something very similar actually happening again, right? But I must say, this might be the last time that we will see this really explosive growth, and we potentially will enter a super cycle. And let me explain why, basically, right? So I can share this in an article. Probably it's somewhere that I will publish after our podcast and after our live stream, and then you guys can read this also for yourself, right? I think this cycle will be much more mean reverting. So meaning, what I mean with that is that we will actually see a complete blowout to shitcoins, and we completely see a lot of crazy things happening, because in this cycle, people will understand, as me and Ivan actually discussed before the stream, that we have execution layer, we have a data availability layer, and we have a settlement layer, right? Like ETH, right? And we will now see a lot of new monolithic chains, a lot of layer twos, a lot of new things. The yields are going to get insane, because all these chains will intertwine, and there's a lot of risks that need to be mitigated with different services. So it's going to get completely insane, and we're going to shoot up the risk curve, I think, pretty fast. But shooting up a risk curve also always involves a lot of extra yields that we can earn, right? So in this cycle, be sure to be very careful with where you put your assets, I would say.
So just to summarize, Amadeus, like right now we have a lot of new technologies, GA, like Celestia, this and that, different techs for different things in the tech stack of a blockchain, and all of them have different tokens. And if you use this, we're gonna give you some yield, and then they put it in another DeFi thing, and it gives you something else. So you can go out on the yield curve. Probably is gonna, if the bull market really comes back, roaring hot. Altcoin season is here, chains launching, chains mooning, coins mooning. There's going to be a lot of this yield offerings, and also there's going to be a lot of looping, that you take an asset, you put it in one thing, then you get the yield or LP coin, you put it somewhere else, you get even more yield somewhere. So that's what you mean, right? It's going to get like insane with this yield and farming, just kind of like in 2021 we saw as well, right?
Yes. And I think we're going to see a DeFi summer kind of like 2.0, right? BlackRock, as Ivan always, you talk about this often, BlackRock launched a on-chain fund, right? They're actually paying out on-chain dividends, right? So these things will happen. The Ethereum ETF, I think, will get either approved this year or 2025, right? So it's going to happen. And this probably determines what's going to happen to this bull market, I think. Because if this Ethereum ETF gets approved, this means just green light for a lot of really complex financial instruments that we are actually building on a blockchain that are much more transparent, much more efficient than the traditional financial stack, right? So you will see a lot of money moving over, people panicking, people don't know what to do, and there's going to be a lot of money injected in a lot of different vaporware stuff. But there's also a lot of things that will actually be real. And that's why I think the cycle will be mean reverting. And things, for example, like in my opinion, like ETH or protocols that have real revenue, like Curve or Frax or MakerDAO or things of that caliber will eventually prevail, because this is the blue chip code that has been tested. I've been, also an engineer, so you know that the longer you build software, the better it becomes, right? Because you will also always find these little tweaks that you tweak, and it's quite hard now to outcompete some of these blue chip protocols that we're seeing in the market. And I think they will probably prevail. So I think don't fade DeFi blue chips, I would say. And I think the DeFi blue chip cycle is going to come back very hard, so mean reverting, and we're going to see a huge explosion in just Bitcoin, ETH, and also a lot of other long tail assets as well. Yeah, correct.
And of course, people are wondering, where will Bitcoin peak out? What kind of price can we expect? Where do you think it's time to sell the bags, go all in stablecoin?
Yeah, I did that actually last cycle, and I think we kind of did that together around a similar time, because it was kind of obvious. There were so many red flashing signals. So I would say, yeah, it's a bit hard, because these signals always seem to change every time. But for me, it was like, yeah, no, I'm not gonna mention that on the stream, but like there was some signals that I was like, oh my god, this is too much. So you just feel like when it gets too crazy, just get out. But it's not too crazy yet. Because every cycle we're gonna get even more crazier, right? So so hold your horses. It's gonna get insane. I'm not sure what's gonna happen, but my price targets. Sorry, like I just wrote it down here. So the
Drum roll,
previous
drum roll. Trrrr, drum.
yeah, the previous all-time high was basically 69,000, right?
And before we go to the price target for this one, so
Yeah.
let's just reiterate: how did you predict it last time? You were saying that you looked at the stock market, like the dot-com bubble, all of the different cycles, at the
Yeah,
Bitcoin cycle, and you extrapolated, right? And you looked at diminishing return also, I guess, right?
correct. So basically in 2019, you don't even see it on this chart anymore, but it was all the way back here, right? And the market was very, very grim. And it was like, okay, how do we, or 2018, 2019, basically, right? It was like, okay, there was this crash happened. What is the next cycle? What's going to happen? So we looked at the S&P 500. We looked at the internet bubble. We looked at the tech stocks. We looked at previous, like the Bitcoin performance. And we just overlaid that and kind of made this price projection chart, right? So this is a Bitcoin repeat cycle that I use, but you can do the same for the S&P 500 and other tech stocks, right? And I just overlaid them with each other, and I made a kind of prediction, and I just plotted it further. And I think we're going to see something similar, right? So history repeats but doesn't rhyme, so it's not going to be the same thing. Like the confusing thing
Vice
about
versa,
this,
vice versa. It doesn't repeat but rhymes.
yeah, that was what I said.
No,
But
but
then
anyway.
okay. Yeah.
Okay, so let's get into the existing ones, existing price targets for this cycle.
Exactly. So basically, my existing price targets for this cycle, if we look at the current cycle, the previous cycle, 69K, and the for Bitcoin, and around 5K for ETH, right? And I think my optimistic scenario is that we will see at least a 4x for BTC and a 6x for ETH. That's my very optimistic scenario. When that happens, I'm going to seriously consider like selling most of the assets and then waiting until it kind of heats down. But I will already take profits when I see a 1.5x, 2.5x, or when I see 2.5 or 4x, right? And I plot these in three scenarios. I overlay them. I see the market. I see how I feel back then. So I make a plan, right? So I make a plan before this cycle. I stay calm. I keep building. So that's why, I'm building now a
Yeah.
new startup, Yield Nest. I'm building hard, and I'm buying more like blue chip assets, right? And I'm making sure that all these assets are generating max yield. And I'm putting them in positions, and I just kind of wait and build and keep studying the market and stay calm and execute my strategy. And yeah, that's it. It's that simple.
And here the methodology is the same, right? Like you look at the past cycles and you extrapolate into the future, right?
Exactly. So I look at the past cycle. Again, this is the repeating cycle chart that I looked at, but I looked at multiple data points that I'm not gonna like share publicly, but I overlaid them over
Yeah.
basically this Bitcoin like cycle chart, and I came to these targets, right? And of course, I tweaked them a little bit to have clear multiple targets. But yeah, these are my rough estimates that I believe are going to go this cycle.
So
Yes.
let's see how if this screenshot right here can be as legendary as as the last one. And for all of you guys watching, like no one knows the future. It's impossible to predict
Yes.
with certainty, and that's why this time we have a plan where if Bitcoin is at 103k, you can start taking a bit of profit, but it can also go to 276. If it is above 276, I mean, likelihood is that it's really gonna come to an end soon. That's the likelihood, but it's never smart to be like all in or all out at this at one in one button
Yeah.
click. That's how many new people think that I'm all in and then okay now I'm all out. Instead, when you see certain targets, you can start scaling back a bit. For example, at 103k, you can start scaling back. Then you can take out more at 177, and then even more at 276. This way, your risk adjusted return is good. Yes, obviously, you would make most money if you sold everything at exact top. It's impossible. You gotta have a strategy like this. And
And
which one?
yeah,
Yeah.
sorry, go.
Sorry, Matthew, because last time you had one. I think you had one, one scenario last time, and now you have three. And it's, by the way, it's very normal to have three, like bullish, bearish, because no one knows the future. But which one do you like lean more towards? Which
I'm
one,
very
if you had
optimistic.
to pick one?
I'm an
Is,
optimistic person, and I believe that we're gonna potentially see this. I think we're gonna see this optimistic scenario play out. I'm quite certain of that. And also the chart you see below. Don't take everything with a grain of salt that I'm saying, obviously. But I do think that the cycle is probably going to take potentially extend, right? So it's either going to take a little bit longer. So this chart there below, it's not a chart that I plotted. It's more this Bitcoin repeating cycle chart that I mentioned before. And basically, I think it can potentially take a little bit longer and a little bit slower, but most aggressive spikes, right? And what I also saw in the data is that if you are not in the market for 2 or 3 days when it pumps, you cannot make these gains, right? If you're there's a couple of days in the market that make you the most gains for the whole year, right? And you can just impossibly time that. So yeah, as Ivan said, like stay in the market and stay liquid, like in the sense of that, like I would say take all your money off exchanges. Like I just as Ivan got a little bit burned as well on FTX, but although most of my money is in DeFi mostly, right? But I would recommend really be really strict on that multi-sigs and like keep your money very secure, put it in DeFi and try to earn max yield, right? So put your money, put your things, long-term bets in yielding positions and stick them in there and make sure it's safe, secure, and then have a
but
good yield.
that's a good question. So to summarize, guys, it is the optimistic one that is the main scenario. But to have a bit of risk management, you have the other targets as well where you can take profit. But Amadeo, so which one of the DeFi protocols do you recommend for people who are fully new? Like let's say someone just wants like lowest risk, but still that you get some return. Where to go and where to click?
Yeah, that's still pretty hard, right? Because a lot of these DeFi protocols that are very simple are very risky.
No, but for
I would
example,
actually,
MakerDAO, you go to MakerDAO website and you can put something there in MakerDAO, basically, right? Or like
yes,
Aave, you can go there and you can just that's got to be the safest, right?
yeah, probably. Like I would indeed recommend Aave, Maker, Yearn, actually, or Convex. The older protocols, like not all these new ones with all the flashy lights. I would really stay away from that. I will actually write in the article a couple of recommendations of what I would do if I indeed would like do the long term hodl, like and where to get max yield in a safe way. But again, also watch out. But the protocols I recommend are more OG and blue chip protocols that have less risks. Yeah.
Right. And so looking at where this industry is heading, we do have now EigenLayer coming out, and your project Yield Nest is on top of EigenLayer. So please tell us about your this entrepreneurial journey that you went on. Why did you decide to build a project, and why did you pick EigenLayer
Yeah.
as a base for it? And by the way, guys, we Amadeo and I were working together, so we will be probably talking way more about it in the coming months and quarters and years. And this is an introduction to Amadeo's project.
Yeah, exactly. So as Ivan said, as I also have in my price predictions, right? So basically, I think Bitcoin ETH will reach these targets, right? So 4x, 6x is kind of incredible to get on your money, right? To be honest, right? And of course, as with Morales money and things like that, yes, we can gamble on some alternative like layers and coins because that will give you 10x, 20x, and probably if you're completely new in the market, that's great. But just do that with 10 or 20% of your capital. And then I would say most of your capital should just be in Bitcoin and ETH. If you get a 4x or 6x on your capital, that's amazing. Even if it's like 20K, 30K, or 50K, that's even the smaller amounts are very, very helpful and useful, right?
Well, what about Solana? So Solana right now is stealing a lot of attention from ETH. What do you think about it?
Yeah, I think Solana is a very interesting protocol. And I must say that when the FTX thing happened, I kind of was like, oh my God, I kind of liked Solana before a little bit more, but then FTX came out of the pocket, and I was like, oh my God, it was all fake. And it kind of was, right? But it actually was not. Like Solana recovered very well, and I think they're doing a great job. Although I'm more of an ETH guy personally because I like the ethos better, like in terms of like, okay, we're open sourcing everything. We really want to build a sovereign wealth layer for the world. And that's what I'm connecting a little bit more to. But I think Solana could also be in there, right? So you could also say like, okay, I'm allocating a little bit to Solana, but I still would say that Bitcoin and ETH are still the safer bets because in Solana we saw the outage and other things that could happen. You have still a little bit more technical risk. Maybe in the next cycle, not anymore. We probably have more blue chips, but right now the blue chips will be Bitcoin and ETH. I would not diversify too much out of that, actually, personally.
Yeah,
Especially
yeah.
ETH didn't have its run up yet, so I think it's a good position to
And,
be
and
in.
that's a good point because people are saying, "Oh, Solana outperforming ETH," but it's just that ETH hasn't even started yet, and likely there is not going to be a bull market where ETH doesn't have a run up, kind of like it had last cycle from 300 to 3K, and maybe this time it's not in the same multiples, but still that it goes maybe from 3,000 to 15, like you have here on the conservative target, like 12 or something.
Yeah, and still the biggest brain shares in ETH, right? So if you go to the ETH research forums and all these things, they're so massive. There's so much information being shared compared to like Solana. Like it's as from a developer perspective, ETH is still like much more mature than all the other chains, right? So then it also comes to something like restaking or EigenLayer that what I'm building right now. Like it's like when you see all the innovation that's now being built on top of Ethereum, and I must say that at one thing I do admit, like the Cosmos roadmap was kind of right? Like I didn't really see that coming, but basically what's happening today is that we had Ethereum, which was just kind of like sharding was like always on the roadmap. They kind of removed sharding, and they're now going to layer 2 approach and different blockchains and different L2s and etc. So it's more a bottom up approach that they're taking, right? And yeah, I think that Ethereum and Cosmos have the right strategy there. The only issue is that we need to make sure that all these layers connect with each other and make sure that we can have have a clear multi-chain future, right? How do we going to do that? How do we going to build a modular security stack? How is that going to work, right? That was my question, and that's what is something that I've been
And
researching for
many
quite
people
some
watching this, like, they don't even know what EigenLayer is. But I mean, the way I explain it, which is probably very simplified, but it's, you have ETH validators. They put in their ETH. They risk losing their ETH if they don't validate ETH correctly. Like they try to get some wrong transactions into a blockchain. So they are basically having stake. They have skin in the game, and if they don't follow protocol rules, they lose that stake. So they, of course, want to follow the rules and get rewards and all of that. And so
yeah.
basically, EigenLayer says, okay, the same ETH, why don't you also do this additional tasks? Okay. EigenLayer gives you another task, and using the same
Yeah.
ETH, you can now basically stake it in this other new job. Basically, maybe
Yes.
you become an oracle. It can be whatever. EigenLayer, people can publish the jobs. The validators can then take the job, and when you take the job as a validator, you obviously get rewarded from that protocol as well, from that app or whatever. But then your ETH are also at risk in that protocol also, because if you misbehave in that new protocol, you may lose it. So basically, you increase your job, not like what you do, you increase your scope as a validator, and you earn additional rewards, but also you have additional like responsibility because you need to follow all of the different jobs. So is that correct? How would you explain it yourself, this EigenLayer evolution of restaking and ETH?
Yeah, that's it's a very complex concept. That's saying the first thing. But how I would explain it, I would say yes. I would say yes. You're doing additional work, right? So it's like you're securing. You have this Ethereum security, and we can now take Ethereum security, which is valuable, which is kind of hard to create, right? Because a lot of other chains like try it, like Aptos, all these other chains in the world that we see right now, they're all trying to get this like node operator set, or trying to get all this distributed people liking their project and stuff, right? It's really hard, right? That's kind of one of the hardest thing about a blockchain. With restaking and EigenLayer, you can, yeah, what you said, you can basically take that thing that we already have and reuse it in other applications. Yeah.
And
So
how do you guys come into this picture with YieldNest?
exactly. So basically, like again, like a little bit of the journey, right? So how I got there, because I saw the Ethereum security was basically going from the sharding to a different roadmap, which I didn't like at the first instance, to be honest. But then I started to research deeper and deeper, and I saw like this actually makes a lot of sense. And even Satoshi Nakamoto himself was like talking about merge mining, right? So restaking is kind of like an evolution of merge mining, I would say. And we see basically that we can take Ethereum security stack and then actually move that a lot all up the stack and have all these applications, all these things, just use the base security. There's no need to spin up all these new blockchains. There's no need to do that. But we kind of need other blockchains with different execution clients, but we don't need new settlement assurance clients, right? So Ethereum is just going to be the settlement assurances layer. And on top of that, we get a bunch of other execution layers, DA layers, a bunch of new applications, dApps, middleware, etc., etc. And that's what's going to happen. And that's why I got so excited about EigenLayer. And what YieldNest basically is doing, we're going to make it simple for people to get exposure to this restaking, right? Because as you can imagine, if you have your Ethereum security, you have your valuable ETH or your valuable Ethereum assets, and you want to earn a very safe yield on that, right? And what's going to happen? We will see a lot of crazy yielding opportunities where people are just going to give you 20 or 30 or 40% for just your base ETH layer asset, right? Because that gives you very high settlement assurances, and a lot of other apps and dApps and etc. want to use that because they want your economic attention, they want your economic, settlement assurances in crypto economic security and settlement assurance in their apps, and we will kind of make it easier for people to just restake that with YieldNest, and we will find the best yielding opportunities for you and give you the best risk reward ratio that you can get on the market, right? Yeah,
makes sense. So how far have you guys come with the project? And I also know that you will be launching a coin soon. And how can people also get the coin? Because I know people watching this, they want the coin.
they want the coin. Let's
ideally
go.
they want it for free also. Like how to get airdrop, man? Give us airdrop.
Yes. So basically, what I've been building basically a restaking protocol, YieldNest, and there has been a lot of hype around this, right? EigenLayer blew up from like a billion to 12 billion overnight. And I was already building this tech stack with a little bit more forward thinking, where maybe some people that are watching have seen different LRTs or different EigenLayer things that they heard about it probably. But what does it actually do and how does it work? Well, I was building that protocol in the background, and I'm going to release it on the 1st of May. So what people can do, testnet will go live probably before Saturday. So this is like a little bit of a peek in the testnet that you can see here. It's a bit grayed out, but you can see here, you can basically deposit your ETH and get a yield on it. So you get a base yield because you're depositing your base ETH and we spend on validators for you. You don't have to do that. Or you can deposit your LSDs. And if you do that, you click on it here, you can basically go to the YNEF page, and you can see, okay, what's happening, what AVS strategies will be used, what kind of risks are involved. We did it together with the Llama risk team that I worked on with Curve Finance, and we're going to analyze all these different risk factors. We're going to analyze all these different AVSs and different protocols that they're going to build on top of this Ethereum security. And we're going to restake that for you. And we're going to select the right node operators and the right AVSs, right? That's all going to happen. And you can just go to yieldnest.finance, and then you will be able to find our testnet, and you can test it around. You can test it for yourself. And when you deposit your ETH, you will actually earn seeds, which are points that might turn into a token or not. I don't know, right? So it's you will earn seeds, and with those seeds, you will be able to participate in the protocol and eventually help us like making this into a decentralized protocol that wraps around this new restaking narrative. And yeah, it's going to be very epic. And we have a lot of really big plans. And as you saw maybe in my seed announcement, there's a lot of DeFi royalty, I call it, involved. So we have Mitch from Curve. We're talking with Sam from Frax. Like we have Yearn, Wavy from Yearn. So all the OG DeFi people that I know from my network, they're all kind of involved in this. And the reason why they're also excited is because the decentralized financial stack is decentralized until a certain extent, right? Because there's a lot of off-chain components that you need to build. And we are also going to help like Curve, Frax, and other protocols in the future to fully decentralize their stack and make them more unstoppable than they already are. So this evolution is basically unstoppable. And if you restake with YieldNest, we're going to give you max rewards so you can sit out the bull market in a very calm way and sell back to stable coins when it's overheated. Yeah, so that's it.
And more practically, so let's say that I'm a user now. Can I use YieldNest right now, or it's still in testnet?
So right now it's on testnet, and on the 1st of May, it's going to be on mainnet. So that's in 2 weeks. Yeah.
Right. And so in 2 weeks, I come here and I can put my money in here, or do I need to be a validator? Like who is this for on the app stage? Like, is it for everyday users? Is it for validators? How do we get involved in this practically?
Yeah. Well, anybody get involved. We make it like super simple and clear, right? So that's what I hope the UI kind of explains it. There's basically liquid restaking tokens, which are basically two versions of it, right? You have a natively liquid restaking token, which basically means that it's native ETH that we're going to restake. And there's like different ERC20s or different Ethereum tokens that you can also use to secure it. So we kind of isolate the two. So to have really isolated risk where you're not in the pool where there's other LSDs that you might not like. You can just go naked bare metal ETH, like Beacon Chain ETH, very secure, safe, and we spend on validators together with our partners. And then we will basically pick different AVSs for you and give you max yield. And a user doesn't really have to even understand these things. If they want to, they can dive deeper, and I would love to tell everything about it. We also have quite extensive documentation that you can read and understand, where we explain like, oh, we have curated AVS baskets, we have isolated AVS categories, how that all works. We explain EigenLayer, etc. You can all find that in the documentation, and would love to explain it. But if you just want to restake and earn max yield, you just click restake, and then you get a base APR. This is just the base Ethereum APR. And then on top of that, you will get different different yields from different AVS strategies that we will select and pre-package for you. And you don't have to really worry about that. You just put in your ETH. This is testnet, right? But you put here your ETH, and you get YieldNest ETH back, and it auto compounds for you your yield. So it's kind of set and forget, and you get auto compounded like yield probably around like between 10 and 20% if all the AVSs come live, right? And in the beginning, you will earn a lot of points. You can go to Pendle, what some people do, and like leverage farm these things. So there's a lot of really cool things you can do with that. But again, you go up the risk curve, right, as we said, right? So watch out. But the base yield, if you just want to be very secure, you can just go here and get like a nice yield on your ETH, and you can participate in DeFi. Yeah.
And how are you guys thinking in terms of audits? Are you guys fully audited already, or is going to happen in the future?
No, we're fully audited. So we have an audit from Chain Security. Chain Security is the same auditor that audited Curve, that audited Aave, and other ones. So this is a very senior audit firm, and we just actually yesterday got the audit back. Well, we had the audit back already 2 weeks ago. We fixed all the all the comments, and that is now done. So actually, all the back end is done. So all the code, all the contract, everything's done. We're just testing. We want to test it. We want to see if and any UI things we need to change. Do people understand what we're doing? Right. So we're at that stage right now. So it's almost go live time. Yeah.
And so if people are watching this and they're really into DeFi, like not the average viewer, but someone who is watching this, they're really into DeFi, they really want to test it and be involved. How can they get in touch? Do you guys have some Telegram or Discord for those that really want to like test it right now and give feedback and stuff like that?
Yes, please. We need testers. So when you guys see this, go to Twitter and then search for YieldNest or search for me, Amadeo Brands, and you can you can also find YieldNest or go to yieldnest.finance. Right now, you can actually see that here. Just go to our website, yieldnest.finance, and you can see there a simple, secure, liquid restaking. That's what we offer.
And
Very
so
simple.
this restaking, Amadou, are you gonna be on DeFi Llama or like? Is it because it's EigenLayer? Like, which chain will it be in? Is it like DeFi Llama under ETH, or because it can also be across chains, right? Like, how will it work in like this cross chain DeFi Llama? Where to see the stats and stuff like that?
Yeah, obviously we're gonna go live 1st of May, so a lot of really cool things to do there still before that's all picked up on DeFi Llama, etc. But we will first start on Ethereum layer 1, right? That's where we will start, and that's where we'll kind of kickstart the protocol, and that's also where you will earn the maximum amount of points, right? Of seeds, of YieldNest seeds. So I would recommend like everybody just if you have some ETH, go to on the 1st of May, go to YieldNest, go to the app, and deposit your ETH and earn maximum rewards. Because in the beginning we have a 5x reward program. Then we have plans, because we're now talking with Sam from Frax, to deploy to Frax chain, right? And we're talking to Layer 0 to basically expand also to Arbitrum, Optimism, and Base, and maybe Linea or other networks as well. But these are still in the pipeline. But for now, it's just Frax chain, Arbitrum, Base, and Optimism. But that will not come on day one, but that is in the pipeline. So we're working on those the deployments and partnerships already.
Got it. That's awesome. And in terms of how you will bootstrap, so you're gonna launch on May 1st. Do you have some protocols already that are gonna join, or you're gonna go do it organic when it launches, or you already have like lined up treasuries and stuff like that? Like, how are you thinking about like growing it when it's live?
Yeah, so basically we have a lot of partnerships in the pipeline, right? So we're talking, as I said before, we're talking with Frax. We are going to build the LRT flywheel, right? Because like I worked in the past with Curve Finance on the risk team, and I know a lot of things about like how the VECV model, etc., worked, and I see a very similar kind of thing playing out with EigenLayer, where right now we have basically a multi-sided market, and we're missing we're missing this symbiotic relationship. And I think similar to what Curve came out, nobody really understood Curve. I think it's very similar with EigenLayer, right? EigenLayer is now out, right? And it's great, and it has so much deposits already, so they did an amazing job. But it's going to be pretty hard for the operators and the AVSs to all work together. How is this system going to work, right? And what Younes built is basically we built a symbiotic relationship between these three parties, and we're working on this flywheel between. And I think that's gonna kick off a lot of really interesting new DeFi primitives, and that's why also Convex is on board, and Curve, and Yearn, and all these DeFi OGs. So we're going to build the best LRT on the market, basically, and we're going to build it in a way so that it will kickstart like the security to really build the sovereign value layer that we need for the world, because we need to decentralize ourselves to the max, because they will come for us, and we need to be prepared to defend against defend us against these people that want to steal our privacy. As I just tweeted out, actually, privacy is normal, right? Or we should be able to just send money around, like if because it's our money, right? So that's what I'm fighting for, and I think together with the DeFi flywheel that we're building, I think that's the noble goal that we're trying to pursue. And I have a lot of backing and support from people around it that all carry that ethos. And I think it's very important for the industry to also keep that ethos alive, else we're basically just a meme coin, right? So we need to.
Exactly. Too many memes, too little utility. But you guys are bringing back utility, and that's awesome. I'm looking forward to this becoming a blue chip protocol as well. So that in the next cycle, in like 2026, 2027, we'll look back at this journey as another blue chip being born. And yeah, I'll link to you in the comment section, in the description. Something else you want to say, Amadeo, before we wrap this up?
Yeah, so I'm very very busy right now. We're just preparing the release of Yield Nest. So thank you, Ivan. Also, for we're trying to do this call sometime, but we
Yeah.
arranged it, and it's amazing to be back on the channel, and I love
But
it.
Amadeo,
And
when is the coin? When is the coin? So May 1st, you're gonna go mainnet. And of course,
main,
people wondering when is the coin? Is it gonna be later this year or during mainnet? When?
yeah, we don't know yet. So we are going to, these points might turn into a coin, and we're just going to see and build like utility around this whole LRT ecosystem, and then we're going to incorporate this LRT flywheel, as I said, to kind of govern the system and further the education and
But to govern, you need the coin, right?
arguments.
So guys, keep an eye for potential
I cannot remember my, and
for
also what I
potential
will
update.
do, Ivan. I'm also gonna the article I wrote. It's mostly my draft. I will not share all the data, right? But the article I
Yeah,
wrote, I will also put this in a nice blog format for you guys. So I will release that so you guys can read that. And I hope this is gonna be a similar historical video, and we can look back at this in a year or
absolutely.
two. Yeah.
Absolutely, Amadeo. Guys, thanks a lot for being here. Very packed episode, both with price predictions that anyone can understand and a bit more big brain Peppo stuff with EigenLayer. Maybe some of you guys understood. Let us know in the comment section. And if not, you're going to learn as the bull cycle progresses. Because just like, whenever there's a new thing, some people understand it maybe 10% in the beginning. And then as it progresses, more and more people try it. It clicks for more and more people. So I think this EigenLayer narrative for most people is gonna take some time to really get it. Like once it's live, they need to try it. But I think some of you guys already fully grasp it. Let us know in the comment section. And if you don't understand it fully, don't worry. Like we're probably gonna cover more news and like you're gonna get more chances to get it. But the quicker you get it, the more money you can make because there are simply more opportunities when things are early. Amadeo, thanks a lot. We're gonna be following you. Looking forward to May 1st and the launch. And have a good day.
Thank you, guys. See you later. Bye. Thank you.